You know, I started winning more trades when I started or really defining better execution points, better zone locations to take my trades from. That's what trading is really about. You know, no matter the strategy you trade, I trade supply and demand. Every video here on the channel, you know, I'm talking about supply and demand, talking about the strategy pretty much and how I trade it. I do that so much because I want to see people become successful. And I know that people aren't simply going to catch it the first time round, second time, the 10th time round. Sometimes it takes time to things for things to unfold and for it to click, you know, in our minds. We have to really see and understand how the market is moving. That's why I talk about market structure so much, and understanding turning points to where there's structural breaks. You know, I like to classify areas of supply and demand in which I trade from, but it all centers around a structure break. I have to have that take place first because that's the creation of the area of demand or supply. Now, do we trade, or are we going to take trades based on every small pullback at a key zone? All right. Lots of people chase the market. They're taking trades back. Okay, the market broke higher. This must be a break of structure. It pulls back to an area of support, and they take the trade based on a rejection. Supply and demand is much more and is more involved than that, I should say. You have to understand to be able to see the aggressive areas of selling and buying and know what's taking place there as the market moves away from those zones and when it moves back there to it, and knowing who caused that to happen, you know? All right. There's a ripple effect that takes place after there's a aggressive area of buying and selling. And we want to be part of that movement when the market comes back to that zone. We want to be part of that reaction at the zone. Especially, I talk about where there's a gap resting back at the zone, where the zone is not quite, or when the zone is not tested for the first time, or not tested at all, meaning an untested area of supply or demand. Now, to the eye, you should get better at, over time, being able to see aggressive areas of selling. And I'm getting ready to cover just two zones, one a supply and one a demand. Roughly, I mean, if I take a look here at my chart here, this is my higher time frame because this is, I mark a lot of my zone locations from this chart. All right, you know, and sometimes I'll just mark a zone off of a lower time frame or a lower base chart like my 12 range. But my 12 range is a chart in which I execute my trades from. I like to see multi-chart confluence. I like to see multiple means of confirmation. You meaning I like to mark a higher time frame zone and then move down to a lower base chart. Okay, or it could be a lower time frame chart for trade time-based charts, and waiting for a series or step of events to take place, which is all covered within the strategy that I talk about so much about, so greatly about on this channel. So please spend some time watching and reviewing the videos. Get your pen and pad. Take notes because we have successful people, successful traders that are part of which are members of our Discord community that have perfected it. They have put their own twist on it. They have educated themselves by watching the videos that I've created and now have become successful in time. Not saying overnight, but in time. And each one of them probably has had their own path, their journey. Trading is just that. You know, it takes time for us to be able to get to where we need to be at, and we have to follow a step-by-step process and make sure we do it the right way. So what I'm going to show you, if you understand supply and demand, because to me, it's one of the best ways to trade. You know, and not everybody's cut out to be a trader. I understand that, you know, less than 5%, you know, in that area, that range, 5% or less of people actually are able to make it and sustain it in this business and become profitable. So pay attention to these two areas that I have marked here on my higher base chart. One is a demand zone and one is a supply zone. And I talked about both of these over on the Discord community. I put it out there. I posted this on Friday saying if you took either one of these setups here, then you came off on the better end, because you could have taken, say for example here, this demand setup back up to supply. It reacted off the supply and taken it back down to the demand zone. Now this is close to the close if you got into the trade off the supply, but either way it worked out. And we're talking about what was this at? Roughly right around 2 o'clock, 1:50 Eastern time. And this right here was roughly around 3:30. So, you know, an hour and a half in between. You know, you could have taken two solid trade setups, and that's all you would have needed to take. I mean, honestly speaking, one of these setups would have done you well if you were to catch one or the other, depending on, you know, how many contracts you're trading. But trading, to me, over time, I found that it's not about going after and being so locked into a certain dollar amount. I look at the way I trade today. I don't look at the money aspect of it until the end of my trading day, and then where I go back and start looking at my trades and looking at, what I profited for that day. Right now, my mind is focused on points, ticks, how much can I accumulate? All right, because that accumulation, it does in the end turn into a calculator equate to a dollar amount, but I'm not stuck on the dollar amount from the jump, guys. Whether it's I'm wanting to look for 20 points out of the NASDAQ or 10 points or 40 points, that's what I'm geared up around more so. So if the first most important key thing that I always talk about is structure. You have to understand what's taking place. Especially I like to look at my higher time frame, because that's what I talk about and tell traders that they should be focused in trading in the direction of the higher time frame when it comes to trading off of their lower time frame chart when they're waiting for rejection. I mark my zones again off of my higher base chart, but I trade off of a lower time frame chart. Again, I talk about the strategy across the channel here, so please take some time watching the videos. I also talk about and show breakdowns, my trades that I take. If you're interested in becoming an elite channel supporter or elite channel member, go down to the lower portion of this video. You'll see down in the description two things there, okay? You'll see the Discord link. You can join that for free. Also, there's a link that says become an elite member. It's $6.99 a month. That's all it is. But what you receive is because I give perks and rewards back for those that sign up for that tier. And basically what it is a tier membership program through YouTube. They offer this to allow supporters or subscribers who want to support content creators like myself to be able to do so. But you receive, in this case here on my channel, a reward and perks back. For one, you get the trade breakdowns to where I go into detail about the trades I take. So that has helped so many people who have signed up tremendously, because they're able to understand and see what it is I'm talking about. Because I talk about the mindset, the thought process before I take the trade, leading up to a trade, and while I'm into that trade, as far as stop loss placement and target profits areas where to take you profit at and things of that nature, but more so about why I got into the trade. So if you're interested in understanding my trade breakdowns and understanding why I took particular trades, you may want to join and become an elite member to gain access to that additional material. Just $6.99 a month, a very minimal fee to gain so much potential or gain so much content and value and information surrounding trades. It does help. Lots of people who are part of the Discord community. We have tons of people who have signed up who are doing well themselves, and I appreciate all the testimony and positive comments you guys have left, and appreciate you really taking the time to understand and see the way that I trade and giving it a shot. But getting back to what I'm talking about here, again, that's down in the description portion of the video if you want to join and become a Discord member for free or become an elite member. So either choice. But look, you can tell by looking at the structure of the market, we're moving to the downside. I mean, it doesn't take a rocket scientist to really figure this out. We were moving higher here, the market shift. We started to break some structure to the downside, as you can see here, especially taking out, areas back down to the downside. You can see structure breaks as we're moving lower, making lower lows and lower highs, and we continue doing so. But then we turned direction when we got, say, for instance, right here, okay, and started moving back higher right here, started breaking structure back to the upside, marking an area, leaving behind an area, a key area of demand right here. Okay, you may be asking, well, how do you classify an area of demand? Well, look at all this aggressive buying right here. You see multiple candles like this climbing to the upside, and then we have more additional buying to the upside. This is demand down here, okay? Even at the first break of structure to the upside and the market pushes higher, this is an area of demand, all right? And lots of times I like to take my trades, more so than often, it makes sense to look for better opportunities where the move started at, okay? Meaning the origination point to where price started breaking structure, where the trend started to reverse and price started breaking structure to the upside, and there was aggressive buying. So this would have been the first, opportunity right here. I mean, it doesn't take a rocket scientist to see this. Origination point, the halfway point, the top end point before the market started retracing back. So, if you can get into the move and wait patiently for the market to retrace back to a key area of demand, this is going to be the better opportunity. I'm not saying the market can't react right here. Of course, I marked this zone right here. Why? Because when the market was pushing higher here, it created another structural break to the upside here, where there was a demand opportunity right here. But the market comes back to it, but it reacts right here. You see that, right? And it didn't last long before it started folding back to the downside. You have to understand and see that the market didn't hold up, long after pulling back to this zone right here. And lots of times what takes place, especially when you see, I talked about this before, the market retracing deep inside of a demand or even a supply zone. Look, be very cautious about that, because if it's breaking deep into a zone, more than likely it's not going to hold up for long. It's going to want to break and test other areas. Now, say for example, just take a look at this. When the market got down to this zone right here, I talk about this as well on the channel. What do you see take place right here versus right here? Well, for one, this was the origination point to where the move started to turn back to the upside, and we got a the market started breaking structure back to the upside where we had demand here. Yes, we had demand here, but the market broke deeper into this zone right here. But if we look at what happened here, when it got down to this zone, look, it came down, a bullish candle, flipped to the upside, with wicking away from the zone the moment it tested it, and it pushed back up to the upside. Those are the type of setups that I love to see, and zones I like to see, and just the creation of which ends up making for a beautiful trade setup when the market tests the zone and quickly moves away from it. Then I'm going to move down to my lower time frame looking for the setup, meaning I'm looking for, when I move down to my 12 range chart from the higher time frame which I marked my zone. On my 12 range chart, I'm looking for a break of structure to the upside, a creation of a demand zone, and pull back to that demand zone. And from there, it's just a moment of looking for a break and close of a candle in the opposite direction for confirmation, which will confirms rejection to take the trade to go long. That's all it is, okay? That is a strategy, okay? Strategies work in steps, and that's the steps that I take. And those steps I talk about in the strategy, I talk about them on lots of videos. I mean, so watch the channel. I mean, watch the videos here on the channel, guys. But this is what I'm talking about. What is going to, I guess, make for a better trade setup is where you see the market move back to a zone you mark, especially where the market, you know, this was the origination point where it started moving back to the upside and breaking structure. And this was the lower portion of this leg right here. So when the market gets back down here to this zone right here, look, the difference of this zone here and this zone here, that's why I have it marked in green. This one didn't work out as well because the market broke back into this zone here deep. Lots of times, again, like I said, when the market pulls deep inside of a zone, be very careful, sorry about that, and understanding there's a possibility it may react, but then it may start pushing back lower, testing lower zones, and then will you see it react at a zone where it's pulling away from it quickly, meaning wicking out at the zone versus breaking into the zone and closing with a candle on a higher base chart? Then look over your lower time frame chart and then start to identify the structural break and then the pullback, or the structural break, and then the creation of a demand setup to a pullback to a key area of demand on the lower time frame. And that's the kind of trade you want to see set up. Look, same thing here. I'm going to show you the same thing where we reacted right here and quickly moved away from the zone. Look where it pulled back to and moved back to supply right here. Okay, we had supply because we got structural break to the downside here. You know, when market started moving lower, making lower lows and lower highs. Okay, moving lower. There was a supply setup right here. All right, right here. Boom. See this? Pulls back, moves lower. So what do you see when it tapped back into the supply area right here? Look. When it got to the supply zone, did it break deeper into the zone and the candle closed inside? No, it immediately on the higher time frame started wicking away back down to the downside real quick. So look over at your lower time frame chart. See if you're getting these a break of structure lower, for one, a creation of a beautiful supply setup, two, and then a move or retracement back to the zone on the lower time frame chart to look for confirmation and rejection to go short. The higher time frame chart is going to give you that reference. It's going to give you a strong idea if the market is either going to try to break into it, you know, and close lower, or if it's going to pull away from it. It started to pull away here. Boom. It tested demand here, pulled away from it. Look for the rejection on the lower time frame. You know, the setup, the rejection to go long. Boom. Where's it going to go to? There's a key area of supply resting right here. So we can take the trade from supply back to, from demand back to supply, back down to demand. So if you took a trade going along here, all right, and I'm going to move down to the lower time frame just to show you right quick what I'm talking about, what I saw on the lower time frame to take this demand setup off my higher base chart, and then the supply setup here. One going to the other, and then the other going back down to the other. Okay, two beautiful trades right here. So let's take this for example right here at 3:30. What do we see right here at 3:30 to unfold back here to this demand? If you see the time frame difference from 3:30 to back up here to the supply zone, a 5-minute difference, back-to-back trade setups from demand to supply, supply back down to demand. So let's move down to the lower time frame now, and I'm going to show you what unfolded right here at 3:30. This is that area right here, that red line that I have marked right there. That's that supply, that demand zone right here on the higher time frame. All right, so the market gets down to this area, okay? All right, making these lower lows and lower highs. All I'm looking for now is just basically the market to make a structural break to the upside in a sense and then pull back to a key area of demand. So when the market made this low right here, what did it start doing? It started moving back to the upside, taking out levels, taking out structure to the left-hand side of the chart, making higher highs, higher lows, higher highs, higher lows. This right here was a very small structural break to the upside, okay? Small area of aggressive demand right here, or just say demand off the lower time frame, okay? Just a small area of demand, but it's still an area of demand as it broke higher here. Pulls back. When it pulls back, I'm just looking for the rejection, okay? Meaning that I'm looking for, this would be the small area of demand off the lower time frame. I'm looking for the market to react here when we get a break and close of a candle. So this bearish candle to the downside. Look, when the market breaks above that area there, right here at 54.5, you can go long or you can wait for the actual close of the candle. But our aim is going to be for it to come back up to the upside up here. And we're going to take the trade from demand back up to this area of supply right here. This is the untested area of aggressive selling where supply is at 89 or 90, okay? So let's say you got into the trade right here at the close of, say, 56, okay? You can aim to take it all the way back up to 90 if you can stay in the trade. That's the hardest thing. Let me go back over here. What was that? I didn't click on some stuff. Let's go back. It should be right here. Here we go. All right. So, the moment it breaks higher, you can get into the trade at 56, it pushes up. But look what it does. Does it ever come back to this area right here? All right, so you'd be asking where you put your stop at. Well, you put your stop at the back end of the area of where you got into, the back end where there's a supporting swing at. It could be the back end of just the area of demand right here, or right here at the back end of where the trade, where it pulled back to the demand zone and you took it from right here. You could use this as an area of support right here, okay? But either way, it never comes back down to this area, okay, before it runs all the way up to 90, all the way to the area of supply. That red line right here is that red line off of the area where I have supply. So demand, okay, right here, we look for the turnaround, okay, the break of structures to the upside, making higher highs and higher lows. We get a pullback, small area of demand, take it up to the upside if you can stay in the trade. And the way I talk about doing so is as the market is moving higher, each time, okay, let me show you. Each time it makes like this move right here. Boom. Breaks, 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 breaks. Boom. We hit the zone, right? Okay. Now, each time that it moves to the upside, if you got your stop resting right here, okay, leave it there until the market makes another pullback. Okay. Meaning breaks higher, pulls back, and then makes a new high. So we're basically looking for a new swing. So it made the swing here, broke higher, new high. What did it do here? It made a new higher low, okay? Higher high. So we put our stop resting right here the moment we get the break of a new high right here. Then it comes down. Yep, it tests right down to the tick almost, a tick or two away, okay? But even if the market came down and ran this area right here, look what you did. You still locked in profit right there. So you could take out, say for example, I probably would take out most of my trade probably right here because this is an area, not most, well, if I had like say 2 contracts on, at least 1 or 2 or 3 contracts on, take 2 contracts out. This is an area of resistance right here around 72, 71 area right there, okay? And then allow the other one to trail. So if you got it in 56 and took it up to 71 and closed most of your position off, then and allow the other one to trail, then you are still in a profit and it never came down here and stopped you out. Then it runs up to the upside again. You're going to keep your stop right here, okay, because it came down equally to this last higher low that it made right here. Now, when it makes this high and makes another higher higher low right here, then just move your stop to this area right here, okay, right here. Now you locked in more profit, okay, and then it makes a new high. Put your stop down here below here, and then it comes up and hits your TP at 90. All right, that's how you trail the stop. People always ask me, how can I learn to be able to trail my profits, meaning being able to take runners and allow the market to trail behind or trail trail behind the market as it's running up to your TP area. But and that's how I do so. And it goes all the way up there and it hits your area of profit. Same thing here. If you take a look here, that red line was that supply area off of my higher time frame or higher base chart right there. Okay, right here at 89 and a quarter. Look, 89 and a quarter. And then we're just looking for the market to change direction, look for a break of structure, shift in the market to where the market starts moving lower, look for a pullback, and then go, take opportunity to go short. We're back down here to the red line. This red line is that marked up location where the demand resting right here, and to look for it to take the low right here at 18,040 and a half. It runs it right there towards the close of the market right there. So, you could have got in here for multiple points pick up here, especially if you got in here at say 56 and you rolled it up to all the way up to 90. I mean, you picked up, what's that there? 24 points right there. Pretty easy. So, and then on the way back down, let's say you got into the trade, I don't know, somewhere at the break right here at maybe 76 and a half, or maybe even down here at 74, but you're still going to aim for it to come all the way back down here to test, fill in the gap here at 56, and then run the low here at 39 if you can hold it long enough. Because if you look and see what happened, if you got into the trade, say right in this area right here, okay, the market came back and it tested that area, okay, after running lower. So look what it did, broke, okay, come back, you got into the trade here, it runs all the way down to 55 before it comes back up here to 78. So maybe you had to stop resting right here above at 82. It never comes back there and stops you out before it goes all the way down there and it takes out and it runs all the way down there to 39, I said, no, 40. Runs all the way down to 40, squeeze this in the 12 range. Come on. Look, it runs all the way down to 39 or 40 area right here. Yeah, there was a significant pullback right here, but it would have never stopped you out if you had your stop resting back here at 83. If you ran it, this is another thing I talk about. Don't put your stop tick to tick, but I'm not going to tell people, what to do in the case. But I'm just saying what I would do is give yourself a little breathing room wherever you're placing your stop at. So if you know this is going to be your supporting swing, say right here, okay, and this is the area where you're gonna put your stop at right here at 83. Give yourself a few ticks breathing room right there, because they love for the market to come back up there because they know people probably entered in this zone, in this area right here to go short. Give yourself some breathing room above that, and if you did, some clearance so that you don't get stopped out and the market runs all the way down there. But even if you locked in here when it came down here to 55 or 56 area, it never came back on the pullback right here. Take some of your profit, okay? Take some of that profit, because look what it did. 56 area was where it came down here for that imbalance resting right here. The imbalance resting right here comes down there. You're in the profits right there. Go ahead and close out most of your position. If you want to leave one running or trailing behind, then fine, do so. But I will close most off. Have my stop plays at the back end here at 83, by a few ticks above it, and then see what happens from there. If it stops you out, then it stops you out. What you lose? A couple ticks? But lock in profits, what I'm trying to say, in both means of taking the demand setup back to supply and supply setup back to demand, and it works out beautiful. So I want to show you, this is how you can gain more winners, okay? Allow that account to actually grow over time. And this is how I mastered it. This is how I do it each and every day. This is how I perfected the game and trading the way that I do, trading supply and demand. But I just want to share that with you. Hopefully that opens your eyes up a little bit better, a little more to understanding, one, how to hold trades, two, zone locations, which ones make sense. Again, look for those areas where the market doesn't break into the zone and close inside that zone deep into it. Look for the quick, look for where it's pulling away from it more so than closing, than moving deeper and deeper into the zone. And those are going to make out for some better trade setups, especially where you have a gap at a zone to where it's untested. I talk about that on in many videos about looking for untested zones versus zones that have been tested, because untested zones mark for higher probability setups or zones. Okay, but that's all I want to share with you guys today. Hopefully that makes sense, and I appreciate each and every one of you for taking the time to watch today's video. If you're not a current subscriber, please take the time by clicking on the sub button down below. Make sure to turn on all your post notifications so you never miss one of the uploads. Please, if you found value in today's content and it has helped you out, please drop a like on the video. And again, if you're looking to become a Discord member, find the link down in the description portion of the video. Click on it. It's free of charge. If you're interested in becoming an elite channel supporter to gain access to the trade breakdowns and that video playlist, which are perks and rewards that I give back for those that support me as a content creator. I'm giving things back. Again, I talk about the trade breakdowns at the beginning of the video. That's just $6.99 a month. But again, it has helped so many people who have wanted to become educated or educate themselves on and specifics to how I actually trade. All right, because I walk you through that process and talk about the trades that I take, so you can understand. Okay, understand the trades. But again, all you have to do is click on that link that says become a member, become a elite member. 2 tiers will pop up, and you'll see one that says elite channel supporter. Make sure to sign up if you're interested for that tier to gain access to the trade breakdowns and the video playlist. Okay, but outside of that, that's all I have, guys. I'll see you in the next one. Have a great rest of your weekend.